The annual report of Sembcorp Industries is always a good read. It's 180 or so pages with information about one of Singapore's largest conglomerates. And, as you'll find out in the next couple of minutes, the conglomerate has been facing some headwinds. For starters, the price of oil has obviously declined, which has had negative implications for the marine business. There's an oversupply of gas in Singapore, which has weighed on the utilities earnings. And their urban development business, which is still small but growing, has had headwinds from slowing economic growth in China and unrest in Vietnam. But notwithstanding all of that, the company still reported an increase in revenue. And as you're about to find out, a lot of the devil is in the detail. You need to know about it before you head to the annual general meeting on Tuesday, the 21st of April. Read the annual report for yourself before you go. But let's anyway have a quick look at some of the main points. Firstly, what I want to draw your attention to is the interview from the Group President and Chief Executive, Tan Kin Fei, on page 26 onwards. It's separate from the Chairman and CEO's statement, so you'll find additional information about what's happening at the company in this mock interview, and I'll refer to it as we go along. First, let's take a look at the overview, and this is how the earnings break down between utilities, marine, and their development business. You can see utilities there in orange, still makes up a substantial part of the biggest share of the profit overall, but it's actually the marine business which had more revenue in 2014. So even though marine, that blue part of that circle, is shorter, the marine business actually generated revenue of almost $6 billion compared to less than $5 billion for the utilities business. The marine business is 61% owned by Sembcorp Industries and has operations in Singapore, Brazil, India, Indonesia, the UK and China. The utilities business, energy, water and on-site logistics, operates in 14 countries and, as you can see, it's still very profitable. Development there, very small part at the bottom, but still gets its share of attention in the annual report. That one is into master planning, land preparation, turning raw land into developed land. Revenue there, $7 million, but in actual fact it earned more profit from land sales, which again I'll come back to. Over to page 52 and 53, which is these two here. Let's take in the group overview firstly as to how their earnings went. And I want to start with cash, first of all, because we've continued to see a lot of investment by Sembcorp Industries in its various business units. In fact, capital expenditure was up 12%. And so we see the cash position go from a positive $350 million last year to a negative $3 billion this time around. And free cash flow has also turned negative, having gone from almost $1.5 billion last year to a small negative $29 million this year. So a lot of reinvestment happening at Sembcorp Industries, which is making its presence felt in the cash holdings. Onto the revenue front, and again, you've got three bar charts here, and what they'll show you is on the left-hand side there is the turnover. You can see that color-coded by quarter, and you can see that the second bar is just slightly taller than the first bar. In other words, total revenue was higher. But already in the middle chart there, the profit from operations, or PFO, that's already declined this year compared to 2013, and the net profit number also, that was down 2%, even though revenue was up 1%. And you can see once again how those various quarters stacked up. It seems like the first and second quarters were slower than last year. The third quarter picked up quite a lot of ground, but it still wasn't enough to increase profit for the year overall. Return on equity was down 11%, and because of the fall in the share price of the company over the year, the total shareholder returns were down by 15%. Here are a couple of other charts. These two show the 5-year history, and the one on the left shows you how revenue increases every year. The increase is obviously a little bit more shallow in more recent years, but it's interesting that revenue keeps rising, while in the chart on the right, you see that profit is not always rising with it. In fact, it seems like every second year is a bit of a down year, so it's more in a zigzag fashion compared to the revenue numbers, which just seem to keep growing. Also, this chart is interesting because it shows the dividends, which of course shareholders are always interested in. The dividend had a bit of a change this year. The payout ratio is about 36%, but what's even more important is that they paid an interim dividend for the first time based on feedback from their investors. So they paid 5 cents per share, made an interim dividend in September last year. They added an 11 cent per share dividend, which will be voted on at the annual general meeting, of course. It has been declared. Shareholders must now approve it, and that will bring the total dividend for 2014 to 16 cents. Now, what's even more important is that in previous years, we have seen higher dividends. 17, 2012 was an aberration, and then 17 again. So it's down 1 cent on previous years. But it looks like the ordinary dividend is higher than in previous years, because the reason why it got to 17 cents in previous years is because they paid a 2 cent per share bonus dividend. That means the bottom line is that 16 cents per share looks like it might be the foundation for dividends into the future. Now, that obviously depends on how the operations go and what the directors have to say, but usually companies raise the ordinary dividend only when they're confident of being able to maintain it, unlike a bonus dividend, which might come and go. Let's now focus our attention on some of the individual business units, starting with the utilities business here on page 68. And let's zoom in particular to those two charts in the bottom right of that screen. What you're seeing here on the left is the profit from operations by geography, and you see Singapore, that thicker orange line, more than half of their profit from operations, and it's the energy business which makes up more than half of their profit number. Now, this is significant because the Singapore energy business has actually been under pressure, and we see that again in the letter, the interview with the President Tan Kin Fei, in which he says that the increase in generation efficiency in Singapore, in other words, they're getting better at generating more electricity using less gas, has resulted in an oversupply of gas. They committed themselves to buying all this gas, now they have to take it. That obviously means that the margin pressure is underway, because all of the electricity generators in Singapore are trying their hardest to sell all of that energy that they're producing more efficiently, because they've committed themselves to those gas purchases. That means that overall they're struggling to increase their profitability on those electricity sales. And given that the Singapore electricity business makes up 20% of the utilities profit in Singapore, that's obviously a significant development. Nevertheless, the margins are expected to improve, although, as Tan Kin Fei acknowledges in this interview, it will take some time for power demand to take up the slack and therefore for margins to improve. Incidentally, renewable energy also features very heavily in the annual report. And here on page 74, we see that chart here, a particular focus on India, because they've just invested in a 60% stake in a company called Green Infra, which is into green energy production, that is through wind and solar in particular, in 6 Indian states. So you can see here in that chart on page 75 a big leap which shows that the total amount of green energy as a proportion of their overall electricity generation or energy business is now 14%. So they've invested very heavily in renewable energies. And we can again turn to the interview with Tan Kin Fei to find out why. It's not just because they want to do the right thing by the planet, although that obviously comes into it, but also because, as he says, there is a risk that the exposure to potential carbon taxation will rise as they increase their portfolio. So in other words, the investments in the renewable energy sector is partly with an eye on the future to see if governments are going to tax more heavily energy operators like Sembcorp Industries for their, let's say, coal-fired power stations. So the renewable energy part of the business is not just for sustainability's sake, but also it's just good business practice. On to the marine business. Here it is. So the review starts on page 74. And once again, let's zoom in on those two charts at the bottom right of that screen. What this shows you is revenue by segment and the order book composition. Now, the turnover by segment in particular is interesting because you see that rig building makes up about 2/3 of their turnover, and that was up 6%. Conversions over here in in grey, 23%. That was up 12%. So a big jump, still only about a quarter of overall turnover, but a big jump in conversions there. Repair, light blue, much smaller now, in fact 9% less than last time around, largely because even though they had many more ships coming through, 440 ships almost, up from more than 370 last time around, the average value per repair contract was less. In fact, it went down from $1.8 to $1.4 million on average, because a lot of the ship owners are still struggling because of the state of the shipping industry. And as a result, whenever they have to do repairs, they want to spend less on that, and that obviously impacts the revenue number here for Sembcorp Industries. The order book, let's look at that, because the order book is interesting for the fact that it is looking to, it's slightly less than last time, down from more than 12 to just over $11 billion deliverable by 2019. They added $4.2 billion worth of orders in a very challenging environment. Here's the quote from Tang Kin Fei. The marine and offshore sectors are obviously facing a challenging time because of the current low oil price environment. Oil prices have fallen from around $100 a barrel to just over $50 a barrel. So obviously that means that a large number of the big oil companies are spending less, are investing less, and that flows through to Sembcorp Marine, which obviously builds a lot of oil rigs for them. Still, they say that they have what it takes to remain competitive. Back to those orders, as I mentioned, $4.2 billion worth of orders garnered in 2014. This is where they are. We've seen almost half of them in offshore, 1/3 in drill ships, and about 1/5 of them in jack-up rigs. Also, further down the annual report, page 80, page 81, and thereabouts, you'll find these two photos which show some of the very large berths that they have in Singapore. Phase 1 on the left there is the longest and deepest repair dock in Asia and the widest dry dock in Singapore, while Phase 2 on the right, which should be completed in the third quarter of 2015, the current year, is expected to be a big dry dock for mega offshore facilities. That's expected to be ready then. And these are going to be important because they'll support the order flow for Sembcorp Marine. You can read about that in the outlook part of the statement, where they say that the order book, as they have it, $11.4 billion, as I've mentioned, that should see them through 2015 okay. But because a lot of the contracts have dried up with the oil price falling, less repair business around, it's these docks that will make a big difference to them being able to maintain their earnings at Sembcorp Marine. Now, lastly, the land division. Turn to page 88 in your copy of the annual report, and you'll see these charts once again. What we've got on the left there is the remaining saleable land by geography. You can see Vietnam, very heavily weighted there in dark green. China is another part there, the lighter green part, about 21%. But Vietnam, very heavily exposed. And the reason why this is important is because Binh Duong province in Vietnam suffered a lot of unrest in May last year. There were riots. In fact, this was the province not only where the Vietnam-Singapore Industrial Park, the VSIP, is located, but it also suffered the most unrest. So as a result, as we see here in Tang Kin Fei's commentary, they had a lot of cancellations, they had a lot of business being lost. The negative sentiment lasted almost throughout the rest of 2014, almost, really only just picked up towards the last couple of weeks in 2014. That should continue into 2015, but it obviously weighed very heavily on this division during the 2014 financial year under review in this annual report. And now looking to the future, we've got land sales, the order book here on this chart. You can see industrial land in dark green. It's going to be 198 or so hectares is the number that they're quoting as being the number in the annual report. So once again, they're looking at ways to move this business along, in some ways also change the business model. And again, there's a quote here from Tang Kin Fei saying that they'll continue to enhance the business model to be able to seize new opportunities and achieve quicker growth. So the word quicker, I suppose, is what hints at exactly what they're looking to do. They're looking to make sure that the business grows much more rapidly than it has perhaps in the past. Just a couple of other quick points to wrap up from the annual report. of Sembcorp Industries. Here's, for example, the Governance and Sustainability Report. These are increasingly important for companies listed on the Singapore Exchange. The exchange itself has placed a lot of emphasis on these reports being included, and there are a couple of noteworthy pages here which I thought I'd just give you a quick preview of, because again, they show the value that the governance and sustainability reports bring to shareholders. For example, on this page here, what you can see is the amount of money that the directors are paid. The chairman gets an all-in fee listed at the top there, $750,000. The directors get a retainer of $75,000, and then they get paid per meeting, and you can see that broken down in the governance and sustainability report. Very interesting just exactly how they break it down. In fact, the directors going to the annual general meeting will be getting $2,500 for showing up on Tuesday the 21st of April. There's also reference made to what Sembcorp Industries does in terms of preventing fraud, bribery, and so on. And here on page 136, they've broken out how they have a policy and manual governing internal controls that were deployed. They also use forensic data analytics as a tool to uncover red flags and identify any gaps in internal controls that need to be addressed. Notwithstanding those, they paid $214,000 worth of fines in Chile and China, and they are looking into these incidents to ensure a non-recurrence. You can read this for yourself in the annual report. I also found interesting the staff turnover numbers, which at 18% were much higher than in previous years. It has to be said that part of this was because of the restructuring of their Teesside business in the UK. They worked with the unions to reduce the labour force there. Voluntary departures at Sembcorp Industries still made up 11% overall. So 1 in 10 staff members left during 2014 on a voluntary basis. They're now investing more in training. In fact, in 2014, they spent about $700 per employee, which was up from around $330 or so just 2 years ago. So you can see how much more they're investing in training for each of their staff. Perhaps that's one way that they'll get the turnover number down. Waste disposal, seeing that we're all clean and green, sustainability report shows you where and how. You can see that they disposed of more waste, largely because that's more ash, where they keep their boilers running longer, therefore generating more ash, and also as a result of some maintenance work, more scrap metal was produced. Read about that for yourself. And you can turn here too to page 264 if you want to read in greater details on the cash flow hedge, which seems to be quite a substantial amount. They've booked a $129 million loss based on the current valuation of the cash flow hedge post-tax and move to the profit and loss. A bit complicated, but again, it's in the report and the notes to the accounts for you. Page 330, here's another one of my favorites, because what this page shows is the directors and the executives' remuneration. This is significant because on page 330, what you'll read is not the bands in which the directors get paid. You know how companies often write between $250,000 and $500,000. Not at Sembcorp Industries. They break it down to the last dollar for all of the directors as well as the top executives. So you can see right down to the last dollar what they got paid, whether it was salary or bonus payments and so on. Very transparent. And also the governance and sustainability report also has reference to the Code of Corporate Governance, and it tells you in intricate detail how they are meeting the code. So all of these details are available to you as shareholders or anybody who reads the annual report of Sembcorp Industries. Here are the details of the AGM, Tuesday the 21st of April at the NTUC Centre, starting at 11 a.m. Make sure you read the annual report for yourself, though, before you go.